beautiful day. Thank you for joining us today for our presentation, From Struggle to Strategy, How Bookkeeping Challenges Inspired a Business. But before we get started, let's do a little housekeeping. If you have questions, please note that you can email us or place your question in the comment section and we'll respond to it accordingly. My name is Jeanette Delgado and I'm the owner of JD Management Advisory. Our mission is to provide holistic bookkeeping services to increase revenue, reduce costs, and ensure physician owners achieve year-over-year growth and remain independent. I'm a certified public bookkeeper with a degree in management, and I have over 25 years of experience in healthcare consulting. I am very excited to have Tyler Clark today. Welcome, Tyler. Tyler is
It's an
the
absolute pleasure to be
co-founder
here,
of
Jeanette.
Dream Firms, a company focused on helping enterprising accountants build profitable and impactful practices. As a sought-after expert, Tyler provides strategic guidance accounting professionals looking to create dream firms. Through Dream Firms, he offers innovative online training, accountability, and exclusive community access. Under his leadership, Dream Firm has empowered over 2,100 accountants to achieve their business goals. That's pretty cool. And Tyler's proven strategies and insights are designed for today's digital landscape, helping accounting professionals reach their objectives faster than ever imagined. Tyler, I'm excited to have you here today as I guest. Welcome.
It's a pleasure to be here. Thank you very much.
I'm really excited about this. And Tyler and I have been doing some presentations together in the past, but I finally got him to talk to me about what I think is important to physician owners, my group, and a line I've heard you use a lot is bad bookkeeping kills good businesses. And I would say that conversely to that, smart bookkeeping keeps good businesses growing, right? So I have hidden a free gift in this video to help our viewers do just that. This is going to be very exciting, and I hope that you continue to listen to us. And so Tyler, you are a business owner, and you have seen a lot of things as a business owner and as an accountant. So you've seen both sides of the coin. So I have you here today because I really love your story. I think that it really will resonate with my group of physician owners and anybody who's really listening that are business owners, because of the fact that you have insight into helping businesses as well as you growing your business. So that I think that's a very rare trait to have. So tell us a little bit about your family history. Tell us how you got here.
Yeah, I think similar to a lot of doctors out there and really technical professionals is that you have a little bit of a family lineage oftentimes that kind of guides you down a similar path as your parents and those who have come before you. And in my case, my grandfather started an accounting firm coming out of World War II. He built that up very successfully, basically $1 million firm, which would be almost an 8-figure firm by today's standards before my grandmother gambled it all away in Atlantic City. And then my father, who helped him to grow that business, built another very successful accounting firm slightly right before I was born. And then he realized that there was this gap in the marketplace, that accountants weren't growing as quickly as him and his father had. And so he launched the first ever marketing and consulting firm for accounting professionals. It was originally known as Clients Unlimited, and then it rebranded to New Clients Incorporated. And right when that essentially happened is when I was born. And then, I grew up under his tutelage, and then I started an accounting firm with my father to continue the legacy of his father before him. We sold out of that firm after, using it to what I would say is be a breeding ground for new marketing ideas. There's this crazy thing called the internet, maybe you've heard of it, that essentially became very popular very fast. And the old school way of, walking around your main street, passing out business cards, attending business conferences, cold calling, sending direct mail, while still have their place in the market, just were not nearly as effective as, quite frankly, being able to get good at online and digital marketing. So that kind of brought me to a very unique place where then I saw the impact of what accounting done well can have on a multitude of businesses. But then I also saw what would happen even to a legacy business like accounting, like a law firm, like a doctor's office, when you have modern day digital marketing principles that really empower it and just make it grow significantly faster and in the direction that people want it to go into. And I think that's one of the big parts, both about bookkeeping or marketing or whether even health, physical health, is you have all of these metrics and indicators that are available if you know what to look for, you know what those things mean, and then if you have an advisor or an expert, they can ultimately help improve and guide those numbers so that they can lead to a healthier business, a faster growing business, or ultimately a healthier body. So yeah, I mean, I've definitely seen quite a few things despite looking relatively young, looking older every day. But I've got a few things I'd love to share with your audience, but I hope that gives a little bit of context on who I am and why I'm here today.
Yeah, and that's exactly why I have you here today. As you pointed out, that some of my physicians and many physicians that go into independent practices, they tend to be a little bit older in age. Around 45 is when they really start realizing their dream of having their practice. And there are several factors, obviously, that guide them to that point. Some of it is they want to control how they treat their patients, first of all. They also want to have that autonomy that a business owner has, along with all the stressors. But the one piece that they also, a lot of them share, the majority of them share, is that they want that legacy. They want to be able to leave an impact on this world, whether it's to their children or to somebody they're mentoring, a colleague that they've hired that can take over, the business, or just, maybe doing some charity work. Whatever that legacy might look like, it really is part of that dream for them. And I really wanted your story to be shared because although you're not a physician, it really kind of goes through that same path and that same need and that same want. So that's where I think you really can provide some insight to my group and to all the business owners that may not be physicians that are listening to this conversation. So you do have that legacy of CPAs, your grandfather, your father. How did that influence your journey? And as a former owner of a consultancy, and now as the Dream Firms, and I know that you have other things in the works. And how does that kind of feed into all of these journeys that you're doing?
Yeah, well, I just have to make one small correction very quickly because I don't want the AI CPA breathing down my neck. I am not a CPA. My father's not a CPA. My
Oh,
grandfather was never a CPA. I don't want to go too far down that track, but essentially, that designation is very nice, but it's not something that is a requirement to quite frankly know accounting well, do
right.
accounting well. It's really only specifically for audit work, which is something we've never attempted to
Okay.
offer, sell, or do. So I always, anytime someone says that, I just like to say, hold on, let's just pause, make sure that the
Right.
AICPA doesn't
It's
decide
like
to
when I have
come
to
after
say
me.
I'm a bookkeeper, I'm not a
Yeah,
CPA, I'm not an
yeah,
accountant, I'm not an EA. I got it. I got it. It doesn't negate the fact that you know your business and you know accounting. It just means that you don't have that designation.
exactly. And I think the legacy piece is nice, but I think it can also be somewhat limiting. There's something to be said for the skill sets of any technician have a very definable ceiling. Where if you're trying to go out and have more impact, I mean, the amount of impact you have as an employee, being a doctor, being a bookkeeper, or any employee is always going to have a limit. And even if you stay strictly within the confines of, whatever blessings you were gifted as a child, because, maybe your father was a doctor, maybe not, and you pioneered your own path, that's fantastic. But even still, there's going to be limitations that are set on you from your surroundings. And I think one of the more empowering aspects of entrepreneurship is what I refer to as trying to solve the curse of the entrepreneur. And that is, when you can do anything, what should you choose to do? And to route back to, your question about impact, I think that the answer to that question is, based on the limited resources that everybody has, where will you have the most impact with your current skill set, or what skill is missing that if you invest a lot of time into developing it will make the existing skill set you have even more valuable? Because I see a lot of amazing bookkeepers, I see a lot of amazing, again, technicians, and we go, if we just layer on some additional business skills here, whether it's getting into content production, as we're obviously doing with Jeanette, or she's doing and pioneering, right? If it's potentially getting more selective in the clients that you are targeting, if it's hiring strategic team members so that your time spent even in the technical role or in a managerial role is going to ultimately net a higher return for your business. So I fundamentally just always look at it as like inputs versus outputs, and being very selective in like, what's the output, like what's the result that I'm trying to get. And impact is one of those things that's like, people say it a lot, and I completely agree. But part of bookkeeping and part of being, a doctor, and part of even, being a marketing consultant or coach, or however I bill myself at that day, is going beyond the answer that's given and getting to the actual specifics of like, what does that truly mean, right? Like, what is this transaction for? And what is it really meant to do for the business at large? Like, how do these things ladder up to a more meaningful thing so that we can have more impact? And so I normally just go like, what are we impacting? And in many people's cases, as you alluded to, the impact is typically tied back to the next generation, right? Like I saw this funny podcast interview the other day, and it was essentially this guy saying like, how would you classify like humans if you were an alien? And I won't go too far down this rabbit hole, but basically said, we are not baby making machines, we're grandbaby making machines, right? Like, because there's this weird urge to like make the world better, not always for your kids, yes, for your kids, but definitely for the kids of your kids. Right. And I think sometimes that's one of the major like aspects that I try and emphasize for impact. It's like, if you don't just think about, I made this person healthy, or I reconciled this bank account, or I made this graphic design look pretty. If you go one step further than that, and it's like, there's an impact beyond that, there's a ripple effect. And I try and just ask people to think more about that and less about like the individual tiny little thing, because that usually helps you on. Basically, like, as long as you look at the second outcome of like doing the action, it's like, like my heart hurts, I should go to the doctor, right? And then the doctor goes, instead of just like, let's look at this one metric, right? It's like, we're going to look at a bunch of metrics, and if you impact all of these, they don't just say, oh, you're going to live to see tomorrow, right? They're going to say, hey, you're going to increase your chances that you're going to be able to do X, Y, and Z in the future. And now you've connected it to a much larger outcome. And now all of a sudden the person wants to actually cut back on the sweets, go for the walk with the dog every day. Like, all of a sudden the smaller things become more doable, or the input to do it becomes more desirable, because you can see the impact much more clearly.
Yeah. It's a holistic approach, which a lot of physicians have incorporated in the past, decades or so, and that does affect the output in the end. It relates to the entirety of the medical practice. I always say to my doctors, you've got to look at your practice from the moment somebody calls in or schedules an appointment in the internet, and then all the way to the end of the payment, all the way till that whole process is closed. So that's what you're saying. It's how do you affect that system so that the output is the ideal output that you want in the end, and that'll cover
Correct.
all of those areas. So yeah, I 100% agree, which is exactly what I try to instill in the people that I work with, and that's the approach that I use in my work. But let's talk a little bit about the difficulties. So what were the toughest moments when you were owning your own firm, and what did it teach you about leadership and client services?
Well, I have a laundry list of a lot of really tough moments. But I think I can probably boil it down to two or three really big ones, and I'll just pick two to just keep it short and sweet that I think a lot of people will appreciate and resonate with. So the first of which is, it's very like, the reason I started with the curse of the entrepreneur is because it's extremely easy to get distracted, and companies will want to sell you on really big promises, especially when you're newer and you're starting out. Like, I was very young when I was starting my accounting firm. I mean, I was probably like 25, something like that.
Yeah.
And, you just don't know what you don't know. And so I ended up buying what felt like a very futuristic software at the time. I know everybody likes to talk about automation and CRMs now and cloud, but over 10 years ago, those things were not nearly as common as they are right now. And so I was like, oh man, this is what we need to do now. And I really went all into this one particular software tool. Now, the tool doesn't really matter as much as like what the lesson is from doing this. But the thing is the tool was more so a marketing and sales tool. It wasn't really a fulfillment tool, but it was billed as an all-in-one tool. Mm-hmm. And so in my mind, I was thinking, oh, well, client files in here, we'll set up all these fancy automations to make sure the clients understand their responsibilities. Well, I basically, instead of treating it more as a marketing tool, which is what it was primarily focused on, I tried to retrofit it to be something non-specific. Like, it wasn't built for accounting firms. It was just a random CRM making big promises. And I'll never forget that I spent all this money, tens of thousands of dollars on consulting, getting it all set up, only for us to launch it and then for me to lose, honestly, my favorite client. Like, he was the definition of a dream client at the time, because the automations were broken. It was confusing to him. It was annoying to him. I couldn't fix it. Basically, it ended up creating a backlog of work. He didn't know felt like he didn't know what he was paying for. And I couldn't disagree with him. And that was a very hard lesson for me to learn, which is, you've got to have the right tool for the right job. And you got to know exactly what job it actually is for.
Right.
That sounds obvious in hindsight, right? Like, but if anyone's ever used a dull knife before, and then someone gives you a sharp knife, you're like, it's like you're living a completely different world.
Right.
So that's one big one for me. And I find a lot of people do one of two things when it comes to software tool selection. They either do nothing with it, buy it, and then never set it up, or set up like 5% of it, or they buy one thing, and this is my problem. They buy one thing and they try and make it do everything instead of just making it really good at what it's actually really good at. So that's one hard lesson. And very quickly, the last one is, I think for physicians, it's more obvious than it is for a lot of other people. But there's only two things that are certain in life, and that's death and taxes. And in accounting, you tend to deal more with with taxes than you do death. Mm-hmm. But I think that the point about impact from earlier is, that your time is limited on this earth. You just don't know how limited it truly is. And a lot of people don't really know why I sold out of my accounting firm. But essentially, the person who was primarily responsible for fulfillment of the work, I was primarily on the marketing, sales, team management, biz dev ops side. But I wasn't really the technical in the weeds with the returns in the QuickBooks files. That gentleman passed away suddenly and tragically during the midst of our busiest season, rampant, really in our highest growth period. Wow. And he was a close family friend. It was brutal for my father, just brutal on the company, tough on me. I really love Robert. He's an amazing guy. And we were not nearly prepared for the inevitable, I think is the best way to say it. Yeah. And that's a very hard lesson to learn. I guess I was 26 or 27 when that happened. But, you know it's coming, you just don't know when. Yeah. And I think a lot a lot of business owners would be wise to start to operate as if they could reasonably suspect it was coming in the next 18 months, and how that would radically change the way they think about how they handle work, how they productize their businesses, how they make sure that there are agreements in place for worst case scenarios. I find these things are neglected until it's too late, and they should actually come to the forefront much earlier.
Yeah, I agree with that. And you find in medical practices, they're good about how it's going to look when you start it,
Yeah.
but they don't think about what ifs you have to stop it, whatever that might be, whether it's the scenario you talk about, or you just stop getting along with your partners, or one of them wants to
Yeah.
retire, and they never built that into their actual agreements, not with, full detail. And that's a big mistake that medical practices do especially when it comes to partnerships and solos. They don't realize that, it's an investment if they have, short-term disabilities in place, or life insurance is in place, or something like that. And, when you're building your budgets, that's kind of a part of that conversation, because it's important. Like you said, you never know how long you're going to be in this world, or just decide you don't want to do it anymore, or want to go into teaching, or want to go to, some other country and really build, a hospital or something. You never know where life is going to lead you. And I agree with you that those are really things that you want to think about as much as you can proactively, rather than reacting to it. So that's a very good point to make during this journey. So thank you for that. So let's talk a little bit about, I know you've heard this before, bookkeeping is just data entry. I hear that all the time from prospective clients, or clients that are, why do I need to pay this money? What are you really doing? Somebody else can do it cheaper, or whatever it is. So, what's your take on the strategic value of good bookkeeping, especially when it comes to client advisory work?
A few ways to address this. I think most people don't realize the cost of bad bookkeeping, right? Because everything has a cost. So what is the cost of bad bookkeeping is the best way of saying this, as opposed to how do we defend why a premium price for bookkeeping is worth it. You really do not have a business that anyone would ever consider buying or investing in if the most fundamental aspect of what determines its worth is not being done in a reputable way that is validated, right? Like it's basically like the business equivalent of just trust me, bro, if you have bad bookkeeping. And like nobody in their right mind makes any meaningful decision based on just trust me, bro. Especially when it comes to, and look, the thing about bad bookkeeping is similar to a, like I could say like, oh, I've got this like, minor cut here, doctor, or I'm not going to pay you to tell me if this is gangrene or not, because I think it looks pretty okay. So like it's a small thing that you can likely neglect for a little while. And maybe it'll be okay if you are lucky, or unlucky in the sense that your business fails, and then it doesn't matter at all. And you're right. But if you have any intentions of going anywhere, let's say you're getting ready to go through a jungle, right? And you have that little cut and you don't do anything about it, the odds that it gets infected and gets worse when you're going to need to climb the mountain, now all of a sudden you can't use your hand, and now all of a sudden you're stuck at the bottom of the mountain and you can't get to the top. So like I oftentimes just think it's the type of thing where it doesn't really matter early on because you have so little activity. But the thing is, as you ramp up, understanding your activity, what's going on with it, and not letting it fester into this enormous problem actually becomes an incredibly important thing to focus on earlier. So I usually just go like, you can't do any form of meaningful financial data analysis, any sort of cash flow forecast, and you can't get to any meaningful financial system with a bad base layer of bookkeeping. It's impossible.
Right.
But if this is good, you can essentially accomplish anything in the financial aspect of your business. And so it's a precursor for success. It's almost like it's I don't like to use like the rocket analogy, but you can't get to space if you can't add. Now, adding is not bookkeeping. I want to be clear, but it's just the point about the fundamental premise that lets you get really far. It's like you cannot simply want to land on the moon and just be like, well, I think math is stupid. You just be like, you don't even understand what you're saying. So again, I understand everybody's got an understanding of what something is worth. But I would make the same comparison. Like, I can go on WebMD. What do I need to pay you for? And it's like, it's more or less the same thing. It's like, you pay us to pay attention to you and your unique situation. You pay us to organize your information in the right way so that it's usable and actionable for you. And whether it's health data or financial data, both are worthy of investing in.
Yeah, yeah. And I usually describe bookkeeping as a foundation for all the financial processes that come after that. Without this foundation, you can build a foundation out of, a few twigs, but eventually that thing is going to break, or you can build it with, the framing and all of the correct wood and the pressure treated and all these things. That's the difference. You have to have a solid foundation, and then you can do whatever else you want. And there's nothing more frustrating to me than going to a client, starting with a client, and they said, well, I just got turned down for a line of credit, and now I'm strapped for cash flow. And it's because they couldn't even figure out what the balance sheet said, or what their assets were, or what the P&L was saying. There was no correct answer, and therefore I say, well, we don't trust what you're saying, what you're doing in your business, so therefore they're going to turn him down. So that happens so often with businesses. So I agree with you that it's the foundation to everything, and you've got to make it right from the beginning, or otherwise it's not going to work for you, and it's going to cost you more in the end to get it fixed, right? So,
Correct.
speaking of which, this is a good segue to my offer of a little gift for the people who are listening to us today. So I just want to let everybody know that if they book a call with me to talk about their bookkeeping, and they put struggle in any part of the form, they will receive 50% off of my open book diagnostics, which is basically our assessments to see where you stand as a business as it relates to your bookkeeping. So that's a really, really good offer. So please take note of that. And there are a limited amount of slots for that. So make sure you secure your gift. Okay. So let's move on. Physicians in a private practice face similar challenges as firm owners. We've talked about that already, and we've covered that a little bit. But they want independence. They don't, but they get bogged down in operations. And you've touched a little bit on this. Do you see tensions with your own clients as it relates to that? And how do you think is a good strategy to try to offset that?
Yeah, I mean, I see it a lot. It's funny because your business basically will constantly oscillate between we don't have enough demand and we don't have enough supply to meet the demand. But the one part of that that's not represented is we don't have the management, the administrative, the operational expertise, support, guidance to effectively manage both of these things really well. And so I try and take it away from, do we have enough doctors or accountants, or do we have enough patients, or do we have enough people buying our services? And I try and say, like, how many smart people are in the organization? Because my fundamental premise for like business growth is the business is going to be capped by the collective intellect of the people who are willing to support it. And so oftentimes what you see with a lot of accounting firms and doctors' offices is you'll have the genius at the top, and I don't like to use this term, but I'm struggling to find another one. And then a lot of, we'll just say, lesser than geniuses that are below them. Okay. And they're basically just, the person at the top is just constantly saying, do this, do this, do this, do this, do this. And it's almost like, I try and make the comparison of when we were in the Stone Age, the way that we communicated was oral tradition. We just talked to each other. And then this magical thing came along. We started painting on caves, right? It was a little bit better. Then we started writing on papyrus or paper of some form, and then we got the printing press. Then we got computers, and then we got recorded voice, and then we got video with recorded voice. And now we can basically merge the three of those together to create an almost unbreakable way in which the quote unquote genius at the top, the entrepreneur, can more perfectly articulate what they want done, how they want it done, when they want it done by, why they need it done, so that they can facilitate a more cohesive atmosphere. But the only way that you're going to really get out of like the bogging down of the operational side of your business is, one, you either get better at being at operations, quite literally documenting SOPs, management, structure of meetings, agendas for the meetings. I say it like this because it sounds like things people already know, but they don't do them, or they neglect them, or they treat them as optional, or they're just not good at the skill of management. Or developing a good operational aspect to their businesses. Yeah. And then the other way, which I much prefer, is I usually just say, once you get to 3-4 people who are not the genius, all the time of the genius is now spent managing these 3 to 5 people, maybe 7 people, and it's a full-time job. And then the business just inherently stops growing. It stops having more impact. You need to stop taking clients. You start to get frustrated, burned out. One person leaves, then all of their stuff falls onto your lap, and then you have to now try and replace them, but you're doing their job for you, right? So it's a little bit of both. Like if no one's working with you / for you, terrible. But if you have 5 to 7 people and you're managing all of them, terrible. So my general advice is like, you just need another genius. And ideally the genius is on the operational side of the business. They're literally responsible for like streamlining, managing, getting everything done, and making sure that you're communicating more so with them and your genius is complementing each other. That's generally my preferred way to help people to grow, because it's really hard to get good at operations if you just like don't want to. It's just hard.
Yeah, and in addition to that, I would add that you put the correct talent in the right positions. Somebody may want to do a job, but if they're not good at it, then don't put them in that job, and put them in a job where they're going to be successful. And sometimes you need to switch people out to do that. So that's part of that operations, but people don't recognize that. So it's not what they love to do, although that's part of it, but can they do it because of their skill sets, or how they think, or how they approach things, and that's especially true right nowadays when you have so many people that have ADHD and things like that. So, and it comes in different forms, so you have to learn to kind of adapt to those scenarios, and how can you get a lot out of these people because of the situation that they're in. So it's a little bit different than it used to be in that scenario, but it all feeds into what you just said. You've got to really manage that much better and understand how to adapt to that as a business owner. I think that's in addition to what I don't know if you agree with that, but that's how I think about it.
Right person, right seat. I couldn't agree more. And even if they want to be in the seat, and sometimes it's not the right move to move them over to that. You see a lot, there's an old corporate expression I like, which is people rise to the level of their incompetence. This is usually, doctors usually don't make great managers, but if you're a great doctor, sometimes all of a sudden they say, well, you're the best doctor here. You should manage and teach the other doctors, but you don't love teaching. You're not good at teaching. Like, And now all of a sudden you're in this position, you've risen quite literally to the level of your competence, and you either have to get better at it or recognize, like, I want to go back to my old seat. And sometimes, again, that's an administrator going to office manager. I mean, there are examples all across the board, but people should be prepared to either invest in their training or know that, they've already prepared themselves for that role. They just haven't been given the opportunity yet.
Yeah, agreed. So what financial habits or systems help you grow your business? And does that apply to medical practices?
I try to, I think business is business. Are there nuances to each vertical or industry? For sure. But most really good habits or principles can be equally applied across any business, especially financial ones. And so there's a pretty simple financial habit that my wife and I adopted. And I think it was maybe, it's funny, it wasn't even when I was running my accounting firm that we were doing this, but I think that one of the best things that anyone can do as an entrepreneur, really anybody, is they should track their daily net worth every day. Like you should go in, log into your credit card accounts, and you should literally write down the balances in a global sheet and look at what your net worth is on a daily basis. I don't know why, but for us, when we were definitely not doing as well as we would have liked, it made a huge difference. And I think this is also true when it comes to bookkeeping or any service that you're really paying for. I find that the best habits, to what I will just say is maximizing ROI. I think that's probably it's like the best habits are, if you spend money in any way, shape, or form, how do you make sure that that money serves its purpose? And one of the things that I was so confused by when I ran my accounting firm is people would pay us for monthly consultations, and but they wouldn't show up to them. And I was like, I'm like, what is going on here? Like, why would this not be, like, this is 30 minutes a month. It's probably the only time in the month that you actually get to talk strategically about your finances with anybody that's smarter than you in finances. And you can't prioritize being on this call. Now, sometimes, there are legitimate reasons to not be there, but for a lot of people, it was just like they just didn't prioritize it at all, ever. And so I think it's a type of, there are many financial habits that help, but I think consistency around being present with experts, being invested in it yourself, like not being afraid to like put in, what is maybe 5 to 10 minutes of effort per day, and like using those numbers to motivate you. Like most entrepreneurs, like sometimes it's hard to get fired up. A lot of people are go-getters. But if there's one thing that fires people up, it's knowing the score of the game, right? Like, what's the score? And the finances are the score. Like, they are the ultimate lagging indicator of all the effort you put on the court. And if you're not consciously looking at that, how do you know when to kick it up a notch, change the defense? Like, I mean, there are a lot of these analogies, but I just think that there's a lot of emotions in business, and the fastest way to cut through emotions is with data. And financial data is the best data in the business. It's literally the most useful. It's the most readily available. And so everyone wants to go, data is the new form of oil. It's more valuable than oil. And sure, but the fact that the average small business owner can't be bothered to maximize the investments they are already making with the only financial data advisors that they have on their team, I just think that they're completely missing the point. And so I would just go, like, if you're not doing that, just start doing those two things. And then if you want to take it a step beyond that, there are definitely a lot of really great financial formulas that most businesses, like if I were to ask your average medical office, what's your CAC? They'd probably look at me like they'd be like, did you ask me if I have a cat? I'd be like, no, what's your cat? What's your client acquisition cost? How much does it cost you to get a new patient? And they'd be like, we have no idea. I'd be like, I bet your bookkeeper could figure that out if you asked them in less than 10 minutes. And I bet the number would shock you.
Yes.
Stuff like that. So, I mean, I think if you go from CAC, LTV, obviously your margins, profit margins, gross profit margin, like all of those things are, kind of basic, but you got to just know like what healthy looks like, not healthy, and obviously start to get into the zone of healthy and just work to beat your CAC every single month, whether that's with improving your overall marketing strategies, opening up new ones, and then you test that against your baseline. Basically, just financial metrics always give you the baseline that you're trying to beat. Yeah. That's the fundamental purpose of them. But if you're not looking at it, you don't even know what you're competing against.
Yeah, and in particular with medical practice, I always like to look at their collection ratio. So how much money did you write off? And they have no idea, and it varies between products. And are you carrying a product that really isn't making you any money? So those are things that are important to really categorize and understand. And you're right, you have to look at it on a regular basis, because otherwise, I can't tell you how many. I just did a post about the fact that most doctors don't even look at their patient AR, and that's 100% of patient AR is collectible, because that's the balance that's actually due to you. So anyways, that's a whole other thing, but I agree with you. You've got to look at it, and you've got to pay attention to it, and have the conversations with your managers about it, because in the end, like you said, you can't be the one doing the operations, but you have to understand what your group is doing to help you with the operations. So I agree with you. I mean, 100%. So I'm glad that we're aligned. I would hate to have to argue with you.
I thought this was a debate I was coming on to hear, Jeanette. I know, what's going on? We got to argue a little bit.
I hate conflict. I'm just the yes man around here. But in line with this whole financial reporting and stuff, and with the thought of that, part of reasons why doctors want to go into their own practices is all the things that we've talked about. But part of it, it used to be, way back when the dinosaurs were on the earth, it was very easy to sell your medical practice. There were evaluations you can do and things like that. And in the world that we're living in today, it's much more difficult to do that. A lot of it, unless you have a very financially stable or lucrative, all the financial data that we've been talking about, it's very hard to sell a practice. But can you speak a little bit about what made your firm attractive to a buyer? Because you said that the reason you sold it was because you had, a sad situation, not because you necessarily were building it up to sell it. But the fact that you were able to sell it in probably a fairly short period of time, what made it attractive as a buyer, so that the people that are viewing today, they can understand what they need to prepare for, so they have a little bit of understanding what that might look like for them, should they try to do that in the future.
Well, unfortunately, the business that wasn't able to sell for what its true value would have been had we tried and sold it before tragedy struck, which is, again, hard lesson for me. Hopefully not a lesson everyone else has to learn in that same manner. I mean, we still did okay, but not nearly as well as if it had been what I would just refer to as a turnkey operation. And this is the difference between, like I said before, the one genius versus the five geniuses, or, however many there are. Because if everything is dependent on the one person at the top, and the one person at the top wants to go to Africa and build schools, or passes away, or it doesn't matter, they're gone. Mm-hmm. Well, I mean, the asset really just crumbles very quickly. Now, we did have a lot of staff accountants in place. He wasn't responsible for a lot of the monthly recurring work, but he was the primary tax guy. So there was a little bit of a, again, oftentimes when you're buying a book of business, you're not buying, yes, you're buying the revenue, for sure, of course. But what you're really trying to buy is the support systems for the revenue. That's what you're fundamentally trying to buy. Because if you're just buying a client list and some goodwill, that's a really tough position to be in. So again, thankfully, we had a couple of qualified staff accountants on the monthly recurring side, but we had basically no tax support beyond him, which was, in hindsight, a very big risk. And so I think, again, for a lot of doctors' offices, when they're looking at how do we sell, I would say, what would you buy? I think that's a much better way of thinking about it. Because it's like, I see a lot of people who try and buy accounting firms. I get a message like this every week, and they go, Tyler, I'm interested in buying a firm, but only if there's no cash down. In other words, they want to acquire the asset with zero risk. And I'm like, would you agree to those terms if it was your business that they were buying? They're like, well, never. And I'm like, so why are you attempting to do that to someone else? I know that people do buy businesses for zero cash down, and it can work, but I just don't think a lot of people are following my fundamental golden rule, but the golden rule in business, which is be the type of client you want to have, or be the type of business owner that you would like to buy from, like that you'd like to buy the book of business from. So I think it's gotten harder because buyers have wised up to the importance of technology, people skills, processes, and management. It's no longer just like, well, I got the best location on Main Street, and therefore my business is worth, whatever I say it's worth. There's just a lot more complexity to acquisitions now.
Yeah.
And I think most of the complexity can be summarized as how simple is it for this revenue to keep being produced independent of a change in ownership.
Yeah, and that's important point that you made about the value that you hoped it would be versus what the actual value of the business. And I think, a lot of physicians think, well, I have a great practice, I have all of these patients. Well, the reality is those patients can easily go someplace else. The insurances are going to dictate, a lot of that. And so the value of a patient is not what it used to be, so it makes it a little bit more difficult. So you're right, it's establishing, maybe some great providers, some great services, some ancillary services that people are coming for, that you're not producing as a physician, or that you have other providers producing, so that you can say, well, this value is in existence and it can, it can move on without me. So you're right, you have to create that environment, and you have to think about it ahead of time so that you are building that, and you can't just slack off, because it's just not gonna work. It's not gonna work.
Yeah. It's not going to happen by chance,
no.
Right? Like, sellable businesses don't happen randomly. It's extremely intentional, and to be fair, it's extremely hard. Like, most businesses aren't worth it.
Right. And you have to understand that. You have to remove that emotion. Just because you worked hard and to build it and everything, and you think, oh, it should be XYZ. Well, not necessarily. Well, let's do one last note here. So, for physicians, they want to be independent, they want to have the legacy, they want to have the control. What's one piece of advice you would give them when it comes to using bookkeeping as a growth tool?
A lot of people do not get the value from bookkeeping. They can't use it as a growth tool because they will constantly use the excuse of, I'm too busy. It goes back to what I said earlier when I was running my firm. I'm like, why are people not showing up to these calls? And we were doing bookkeeping. I was like, what's going on here? And they were not doctors. Some of them are not nearly as busy as your average doctor. And so what I try and do is I just always look at not the average doctor or the average business owner, but who's the top 1% of doctors out there? Who's the top 1% of people that are like living the life that I want to live? And what you will almost find categorically across the top 1% is they listen to experts and in the field that they are not experts in. Bookkeeping is the field that requires expertise to get good at. You can't just take some random YouTube class and all of a sudden be as good as Jeanette. I promise you that ain't the way it works. Just like if I were to take some random doctor class, I am not a doctor now, right? Like that ain't the way it works. It is a craft. And so the way that I again, for bookkeeping, it's just like, it's a way of proving that you are prioritizing your own business instead of everyone else's needs and desires. Like most businesses stay stuck because they'll go, my clients need me, I'm too busy to prioritize my own business. And again, I go back to what I said earlier, which is like, there's a lot of emotions and feelings in your business. Like sometimes you come into work and you're like, we're the best. I'm amazing. I love where we're going. And then the next day you're like, man, what am I doing with my life? Like it is like this a lot. And so if you want to minimize what I just call the peaks and valleys in business, the way you stay even and quite frankly keep trending up overall is you got to have a recurring center of gravity, something that essentially is immutable to the emotions. And as I said before, it's your finances. Like they don't care how you feel or don't feel. That it's just the raw truth. Mm-hmm. And if you're trying to grow your business, do you want to grow it based on feelings and guesses, or do you want to grow it based on data and truth? Right? Like you're just constantly gambling instead of saying like, oh, these are the real probabilities. Oh, the bookkeeper who works with the people just like me said these numbers are way too high. I'm not collecting enough from patients. Oh, wait a minute. They also indicated that our administrative costs seem really low for the number of people that we're serving. Actually, now that she mentions it, I am slammed with a bunch of meaningless nonsense. That's right. Oh, didn't she just bring up that we're paying for all this software that we're not using? Oh, I guess our margins just got better. So like, I mean, I put this on my LinkedIn like all the time, but I'm routinely like, man, my bookkeeper just saved me another 10 grand. Man, my bookkeeper just helped us triple down into the right areas to grow the business again. So, I think it's exactly like you get out of it what you put into it. You don't need to do a ton. But if you ignore them, just like you ignore your doctor, or you ignore their advice, just like people ignore their doctor's advice and they keep gaining weight or their health problems keep getting worse, well, of course, it's not going to be a tool for growth. No, duh. But if you're paying for it and you want to get to a place that you know is possible by emulating the 1% of people who've gotten there, generally speaking, when they pay for expertise, they listen to it. Yeah. And that starts with bookkeepers and goes across every other domain of expertise.
I agree. Well, Tyler, it's been almost an hour now, and it just seems like it flew by. But, all of your advice and your insights, I think, have been very helpful. I hope that you have inspired our viewers and provided insight to them to drive their practices and make them grow and make of that what they want. And so I want to thank everybody for joining us, especially Tyler, and hopefully, he's going to be joined by a little baby soon. So I appreciate that he actually made it to this presentation. So hopefully that'll happen soon. My name is Jeanette Delgado. I'm owner of JD Management Advisory, and I thank you, Tyler Clark, co-owner of Dream Firms, for joining us today and sharing your incredible story and experience. The contact information is found in the video's description. It's a beautiful day. Bye-bye.
Have a great one, everyone. Thank you, Jeanette.
Thank you.